All right, I just recorded a 7-minute video and I forgot to turn on the sound, so you guys couldn't hear me. So we're gonna run this back. If I sound tired, it's because I literally just did this, but it didn't fucking record. All right, so we're gonna be running through really 4 things today. It's gonna be quite simple. Not gonna overcomplicate it. Not gonna be too much. Not gonna be too extra. We're gonna be going over what futures is, what a bearish and bullish market are, what an index is, and what are my strategies personally. So futures, it's in the name, right? So you're predicting the future of the market. So regardless of if the market goes up or down in price, you can still make money off that. In futures, you're not buying into the company, you're buying a contract with or against the company. So let's say Amazon's going down in price, you can buy a sell contract. You can still make money off that. Even though it's going down in price, you can still make money off it. So futures, you're just buying a contract. You're not actually buying a portion in the company. You're buying a contract and you're selling the contract whenever you take your profit. All right. So it's pretty simple. You're just predicting the market, where it's going to go. Um, Obviously, using tools, I kind of explain those later, but you're just predicting the market. That's all it is. Don't overcomplicate it. Um, so now, what is a bullish and a bearish market? When I first started trading, I kind of identified it as a bearish market is red and a bullish market is green. Obviously, red is bad, green is good. In this case, it doesn't really matter. In a regular stock market, obviously would, but in this case, it doesn't matter because you're trading futures. So a bullish market is whenever the stock market is going up in price, and a bearish market is whenever it's going down in price. Why it does this is because in a bearish market, the people who own a majority stake in that option or contract, sorry, not option or contract, that stock or index, um, are selling off their portion. So they don't want it anymore, they're selling it off. And then obviously bullish is going to be the opposite. It's whenever people are buying back into the stock or index. It's pretty simple. It's just usually overcomplicated. So obviously red and green. Don't overcomplicate it. It's pretty easy. Obviously, you'll need to know how to read a bullish and bearish market. We'll get into that later. But just for now, we're just going to explain what it is. Just simple. So what is an index? So an index is actually a group of stocks. So instead of it being just Amazon, it's going to be, for instance, and this isn't actually an index, Amazon and Meta, right? So those are a group. There's two. Let's say Amazon had bad earnings, they released bad news, and their stock is going down in price. That index wouldn't be affected that much. Obviously, it would because, I mean, there's only two stocks in that index, but it wouldn't fully tank because you still have Meta, right? So that's why Roth IRAs and retirement accounts, they mostly use indexes. They don't use regular stocks. One, because they're more stable. Two, because they're more consistent. And three, security. So that kind of has to do with the stable. They don't want to lose people's money. They're managing your money, right? So they obviously want to be smarter with it. They want something more stable and secure. All right. So an index, again, is a group. It's a group of stocks, just opposed to one. Um, they're kind of working together to influence the price. Um, and then I trade NASDAQ. It's a tech index, so it's a lot of tech companies. I went to school for tech. I work in tech. That's just what I do, right? So that's why I trade it. I'm familiar with it. Usually, whenever you're trading, you want something you're familiar with. If you don't know shit about coffee and you're trading a coffee stock, you're probably going to get fucked. Be honest with you, because you're trading something you know nothing about. Why would you do that? That's just stupid. Um, Usually with futures, you want to stick to one thing and master that. It's way easier to master one thing than 5 other things at once, right? So you kind of want to focus on one thing. You can move around, see what you like the most, but obviously when it comes down to it, you only really want to focus on one thing. All right, so what are my strategies? We'll be going over this. I trade, it's pretty easy. Supply and demand mixed with volume, mixed with trend. Supply and demand has been teached in schools for years. I know some schools don't have it, so I'll go over a basic thing. So let's say you own a roofing company, right? And someone needs the roof done. That's supply and demand. Someone needed the roof done, so you did it for them. It's pretty much easy. Whenever somebody needs something, it's fulfilled. Or something needs something, it's fulfilled. Um, like if there's not a market for something, obviously there's not going to be a lot of companies in it. For instance, there's a lot of clothing brands probably you see on TikTok. People are launching clothing brands every single day. That's because people need clothes. It's a basic necessity, right? So it's easy. Supply and demand. When somebody needs something, it's fulfilled. Just like right here, if somebody wants this, it's going to be fulfilled, right? So again, with futures, you're trading contracts. So if somebody needs your contract, they're going to buy it off of you because there's a demand for it. You're selling your contract because somebody wants it. Obviously, if nobody wanted it, this wouldn't be a thing. Like, I mean, it would be a thing, right? But you'd be stuck in the trade because nobody wants your contract, and you would have to hold on to it until somebody wants it. And in that time, it could either go up or down in price. So that's not really good. So basically, supply and demand, knowing what the market wants and how it's being fulfilled, is very, very important in my strategy. And then again, volume has to do with supply and demand. We're going to get an example really quick. So if you want to look here, where my cursor is, kind of in the middle of the screen at the bottom, you've probably seen these bars. So right here at 9:29, there was a little bit, like it wasn't that big. And then if we jump over a minute later at 9:30, it's pretty much 4 times bigger, right? So there's a lot more volume at 9:30 than there was at 9:29. That kind of has to do with market open. And we'll go more into that when the market opens and when it closes in detail. But just for now, the market opens 9:30 Eastern Standard Time. It closes at 4 o'clock. So that's really all you need to know. It's pretty easy. There's nothing else really to it. But volume, it's just whenever somebody needs something and there's a lot of it, or there's a lot of people trading in this instance. So let's say at 10:29, nobody really wanted to buy anything or sell anything. There was no really volume, right? And then at 10:18 right here, as an example, a lot of people wanted to sell off. So it was a lot more volume than there was at 10:29. And that's kind of just an easy way. It's just however many people there are doing something, or however many people needed something. Um, so volume is pretty simple. I would assume everybody knows it by now, but obviously, if you have questions, you can still ask. I get it, right? And then trend. So if you want to look at the kind of bottom right hand side where my cursor is, you'll see the 20,466. Right below, you'll see -433 and then -2%. So that's trend. That's what the market is doing that day. Today, we have a very, very, very bearish market. So in this case, I would only trade sell contracts, right? Or shorts. And then actually really quick, I'm going to go over that with you guys too. So right here, you'll hear people say long and short a lot whenever you hop into trading. So you'll see two different things right here on my screen. This is called a long. This is called a short. So a long is whenever you're buying into a contract that says it's going to go up in price, and then a short is obviously the exact opposite. You're saying that the index or stock is going to go down in price. And those are directly correlated to the trend of the market. I would hope so. If you don't really trade with trend, it's very risky. You're trading against multimillionaires, and you're pretty much saying that you can trade against them. Like you know that the market's going to move against them. So it's not really smart. Obviously, you can do it if that's what your trend is, but it's not very smart. So again, trend is just what the market's doing that day. If this is a plus 433 and a plus 2%, it would be a bullish market. So it's a bearish market because it's going down in price, and we've lost $400 today. A bullish market would be if it gained $400 today. So instead of it being 20,465, it would be 20,865, or whatever it may be, right? So again, bullish going up, bearish going down. Trend is just what the market's doing, what it wants. That's directly correlated with volume as well as supply and demand. So my trend, it's kind of common sense, really, if you want to get it in simple terms. It's literally just common sense. People like to overcomplicate it, but it's just common sense. The good thing about trading, though, is there's literally thousands of strategies. You can do whatever you want. There's easy money, there's ICT, whatever you want to trade, okay? Or sorry, not easy money, smart money. But you can trade whatever you want, whatever makes you happy. That's the good thing about trading. Just make sure your strategy is profitable, or else you'll obviously lose a lot of money. But yeah, trading is pretty simple. If you guys have any questions, let me know. I want to be doing a recap of the trades I took today. It's going to be a little bit more complex in this video. Yeah, let's go over that.